NICOLAS Darvas was a famous stock trader, although he was actually a dancer at the time. And what he did was he turned around about $10,000 into $2 million. And this was back in the 1960s and 1950s, so mid kind of 19th century. And he developed a strategy that he called the Darvis Box strategy. So what I'm going to do is I'm going to do my best to explain the basic principles behind this, how you can start using it in your trading as well. But it all comes back to what I've been talking about recently on the channel about identifying fractal patterns and being able to take advantage of them. So what I'm going to do on the following slide is kind of draw it for you for illustration purposes. Then what we're going to do is we're actually going to look at a stock and we're going to work through it bar by bar to see where we would have actually taken the trades implementing the Darvis Box strategy. So here's Nicolas Darvas, born in 1920, Hungarian, and he died in 1977 in Paris. I'm not sure why the profession says economist, because he was a professional dancer. So anyway, let's get into it. So on this slide that we're about to go on, what do you see? We see a load of boxes. Now the boxes are blank and white on purpose because I'm going to use the magic pen to draw in them to illustrate the Darvis Box strategy to you. So remember the whole fractal geometry to this, that we are identifying the fractal structures, i.e. the boxes, which is basically price ranges and reaccumulation structures that he was buying in the Wyckoff methodology would call that. He was pretty much just buying breakouts from Wyckoff wave patterns or Wyckoff reaccumulation structures, but we'll start working our way through it. So we can obviously see the box here. So what we want to do is imagine that price, and let's use a ink color that's going to really stand out here, red. So what we can do is imagine that price, okay, was trading within these boxes. Okay, and what Darvis would do is when he had a break from a breakout, so moving from one box to the price range that he had decided, so we could be calling this say $10, and this could be $8. So the box could be trading in a range between $8 and $10. So what he would do is he would then buy on a breakout when price moved up to a higher box range, and then what he would do is try and decipher the range of that box as well. So what I would then be looking to do that, and I'm going to show you on a chart through my lens and how I would apply this, is I'd be going, okay, potentially we're looking for a change of character and a shakeout type event in terms of a reaccumulation box to form, so the buying climax, change character into a shakeout, or potentially into an automatic reaction as well if it's going to have more of the bearish bias. So price would then accelerate into another box, okay, would come down, okay, price would accelerate into another box, come down, and then he would never buy. Okay, so his stop loss, if I start highlighting where his buys are going to be, it's obviously going to be there, it's obviously going to be there. His stop loss triggers, okay, are going to be in these regions here as price moved back into a lower box. So he would never buy a stock when it moved into a lower box. So then obviously we're back in our box here, okay, we break out, come down, back in a box, we break out, he'd buy there, we come through, okay, and so on and so forth. So where he is buying is he's trying to buy as the box, so the price range increases, and he's buying on the transition from one box to another box. Now obviously it's quite subjective as to where do you define the ranges of the boxes, but these are the points of which NICOLAS Darvas, okay, is buying, and then his stop loss, as we said, would be as it moved back down from one box to another box. And obviously he's not buying in these regions here, okay, he's buying the breakouts, so as the price is accelerating throughout the boxes. So basically breakout trading and using the fractal nature of the boxes. So at each of these boxes, okay, this could then be a high of say $13 for this box, this could then be going up to say $17, so again this is $17, this could then be $20 up here. So the boxes have different, that'd be 17, that would be back down to our 13, and this would be back down to our 10. So you can see how he would start scaling up into positions, and again this is a very good way to hold stocks for a long period of time if you're trying to, what we'd call in the Wyckoff methodology, if you're trying to campaign stocks as well and adding on reaccumulation breakouts such as Darvis was doing. So let's now jump on to this chart here, which is going to be of Apple, and what we're going to do is work through it okay, together, and we're basically just going to go through bar by bar to see where we would have been taking trades using the Darvis Box strategy. So, and put the magic pen down a sec. Let's get the magnet. So what we're going to do is we can see that the stock was obviously in an uptrend. Okay, remember that Darvis, if this is the range of our box in here, okay, remember Darvis is only buying as we're progressing up through the boxes. So what we want to do is identify a potential low that has a swift change of character, okay, a sharp rally to start identifying the outer boundaries of our box. So we can potentially see something here. We can see a move to the downside and then a sharp increase here. So what we're going to do is we'd mark the low point and the high point. That's irritating. No, it won't let me do it right there. Come on. Okay, something like that. So now what we can see is the outer boundaries of our box here. So what we're doing is we're looking for a break to the upside above the high of this box. In this instance, it's going to be $16.36. So we can now delete our upper box up here, okay, because we're just progressing here. We can see a break below. Okay, remember we're looking for a break to the upside, and of course you could then start to identify. Okay, leave me there. Okay, you could then start to identify again the whole fractal nature of this. Okay, boxes within boxes. So then we could have a box between the blue, so $11.31 and $14.80. But again, we're trying to do this on a bit more of a macro zoomed out scale. So we're using this point here, which is $12.19 and $16.63, because remember what we're trying to do is from the Wyckoff accumulation base, we're then trying to capture the meat of the uptrend as we move from our phase 1 accumulation structure into our phase 2 markup. So this is going to be the outer boundaries here. So we keep going, we see another break below. We keep going, Remember, we've got our big box forming here, which again is going to be the phase 1. So this is going to be our Wyckoff accumulation structure, and now we're looking to go from phase 1 into phase 2. Those of you that are familiar with Mark Minervini as well, buying in phase 2 uptrends as well. Again, very similar take of the Darvis box trading strategy. Okay, buying as price breaks out of a trading range and continues its move to the upside. So what do we see here? Well, we see a bar, okay, on the 6th of April 2009 that breaks the upper boundary of our box that we've formed here. So we'd be looking to take a trade in there. So what I'm going to do is get an arrow, spin it round. Okay, so that's going to be our first entry using the Darvis box method. Okay, we've broken out from this box and we're now moving potentially into another box. So we want to see how this unfolds. So what we can see is price starting to progress upwards, coming back down, still progressing upwards though. So now what we could start to do as well is start looking for smaller boxes as we see this uptrend starting to commence. So we could draw a line there. Okay, this would form our box. I'm obviously just using lines to represent the price levels of the box. So what we can see is another box now. So $19.07 and $17.05 for the bottom of our new box that's going to form. If I do just draw the box, that might okay, so remember the box would be from this region. It would still be doing it as well. So we're just going to stick with lines. Hopefully it'll make sense. So what are we doing? We're now looking for another box to form. And what happens? We get a breakout above that box. So what do? We add to the position here. And again, this is how he scaled in to positions and accumulated these big positions in stocks. And he was able to obviously turn his $10,000 into $2 million, which was a lot of money back in the 1960s. So we're progressing upwards now out of this second box. What happens? We come back down, we nearly retest, or we do retest that box, we continue to the upside. So again, we might now be looking for another box, which we're going to use the high of here. So we're going to change the color to say pink. So we've had our first large box, okay, that would be in the context of the Wyckoff methodology, this would be our phase 1 accumulation structure. So we're now breaking into the phase 2 of the Wyckoff price cycle, okay, where we're expecting the continuation of the uptrend. So this is going to be the most optimal place to be looking for these Darvis Box breakouts. But again, it's the fractal nature of it, again, just identifying breakouts from reaccumulation bases, basically. So we're continuing. We've had one position, we entered our second position in here, so we're now looking for a breakout above $20.91. Let's keep going, and what can we see on this day here? We have another breakout, okay, above the box, so that's where we'd be looking to take our trade. And remember, the bottom of our box would be back down here at $19.07. So we now continue to break to the upside. Okay, so what we're looking for to form the basis of a new box is a relatively large reaction, okay, what we'd call in the Wyckoff method kind of a change of behavior or a change of character depending on the severity of that. So we're continuing to the upside here. Haven't seen any large reactions yet to really start defining a new kind of box range. Nothing obvious to me anyway. So remember our position, we entered in here, okay, that's on that bar there where it actually had the close above, okay, and we also entered on this bar here as we broke above this resistance. So we keep going, no real clear boxes, maybe now, because we can see the extent of this reaction that's pulling back. So what are we going to do? Mark that as the top, and we're potentially looking for the bottom now to be defining the lower boundary of our trading box. So let's change that color to say a let's go for a red up there. So again, we're progressing. Now look, we've come down here, okay, and now we've started reversing. So that's going to be the bottom of our next box. Okay, so our next box now is between $29.82 and $26.51. So we're progressing here. What are we doing? We're looking for a breakout, okay, above that 29, I don't know why I keep saying 19, $29.82 is what we're looking for. Still within our box. Okay, still within the box, and there you go, that's the breakout right there on that day. So what do? That's where we're looking to take the trade, add to the position. Okay, this is a way of adding to your winning stocks as well. So we've taken the trade in there. Okay, we're hovering around the top of this box. We come back down into the box, but we haven't yet broken the bottom of our box, which is where the stop loss would be. So remember our entry points. We're in from around about, what's that, $17, we're in at $19, and we're in at around $21, and now we've just taken another trade at nearly $30 as well. So we're still in this position here. Let's see how it works out. Okay, we're now popping up here. Again, what are we looking for? We're looking for a reaction from this decline, okay, to indicate that another box, remember Darvis Box strategy, is going to start forming. So we can see a nice strong uptrend here. Really pushing on. We're potentially pulling back here. So what can we see? We can see a pretty sharp decline now happening. So what do? We'd mark the top of this as potentially another box. Let's do that in a kind of darkish green. So we're coming along. We've got a very long wick down here, part of the kind of flash crash. So let's take the bottom of the following wick here, which is going to be a little bit more realistic. So we've now got another box potentially developing between $38.92 and $32.17. So we keep coming across. Remember, we're either looking for a breakdown below that box to stop us out, okay, or we're looking to add on to the position if we can break the top of that box. Oh, and what happens here? We have a breakout above the $38.92. So what do? We add to the position. We keep going. Come back down. We're back in the box now, but again, we haven't fallen below the bottom of the box, so our stop loss isn't triggered. Coming back up to the top of the box, got another breakout. So just remember where we've been taking the position. So obviously this is a way, and this is how Darvis did it, obviously to turn $10,000 into $2 million. You need to find a pretty big winner. Obviously Apple has provided us that opportunity, but remember where it comes. Okay, we had the, obviously just in terms of the Wyckoff price cycle here, okay, we had the phase 1 accumulation structure earlier on, phase 2 markup, phase 3 distribution top, phase 4 mark down here. Again, we go back into the phase 1 accumulation. So it's as we're coming out, and this is why context is so key, it's as we are coming out of the Wyckoff original accumulation base, so phase 1 of the price cycle, moving and transitioning into phase 2, and then what you're trying to do is you're trying to play the reaccumulation structures and the breakouts within those. Okay, I don't know if Darvis studied the Wyckoff methodology, but again, it's in the context of phase 2. Where was Darvis going to be most successful? He was going to be most successful in the context of the phase 2 uptrend of the Wyckoff price cycle. Okay, so we're still in this uptrend here. So we continue to break, we continue to break out to the upside here. We still keep going. I don't think this was a large enough reaction to justify a box. Again, you could be saying, well, let's draw some smaller boxes in here. So let's take a breakout above $42. For me, that wasn't large enough. Okay, maybe we're looking at something in here, forming a potential another box. So we could be using, say, that as our low for the box. So let's make that a light blue. And then we potentially got this as the top of our box. So we've got another box potentially forming between $45.90 and $42.54. Let's keep going and see how this goes. We see a breakout, but we don't see a close above the $45.90 level. So let's keep going. Let's keep going. See if we get that breakout bar. Okay, we can start to see several breakout bars. So we could take another entry in here. Remember, our stop loss is going to be as we transition, as we move up from the boxes. So remember what we were doing on this slide here. Okay, we're transitioning up through the boxes. We're in this phase here. So as we then transition down through, that's where we're going to be stopped out of our position. So we've entered another position here on the break above the $45.90 box. Let's see how it plays out. Okay, we can see the acceleration to the upside again. Remember, our stop loss is going to be down here at $42.54. Continue to accelerate to the upside. Okay, maybe we're looking at potentially another box forming. Maybe we're taking the high of here. And again, trying to identify these repeatable fractal points. So let's do this in, say, an orange color now. And say we use this as the low. Okay, so now we're using this as the low of our box. So a break below $46 here, and that's going to stop us out of the position. We're hovering, nearly got stopped out, but we don't see the close below. Do we get another break out above $52 or not, or are we going to get stopped out of the position? We can see price moving down. We're very close to being stopped out here, and on that bar there, that's where we're going to be stopped out of the position. So let's just change the color of that to red so we can clearly see. Okay, so that is where we're going to be stopped out, okay, of the position. So what can we see? We can see we had our original entry down here at around about $16-17. We were adding on to the position, okay, and then we're stopped out at $46. So you can see how profitable, okay, this trade was, going up hundreds of %. And then let's see what happens following. We have a rally, we come up, and then we continue to go to the upside. So again, that can happen if you get stopped out on one of your boxes. What you can then do is obviously just restart the trade and start to identify more boxes as we go. So we could now keep going. So we were stopped out here, but we could start looking for more trades. So again, this looks like a reaction. So we go here. Let's change the color to, say, pink. And the bottom here. So we've now identified another box between $50 and $57. So we're looking for a break above $57.79, and it happens right there on that bar. So again, this is how we then re-enter the trade. So remember, our stop loss now is going to be at $50. We can see the position moving up, still hovering within that pink box. Position now moving up to the upside. Again, we can start to see the acceleration here. Okay, as the stock really moves from our entry point here, and again, using the bottom of our box there as a stop loss, we obviously don't get stopped out, and you can see the acceleration that we had up there. So again, that's basically how the how the Darvis box theory worked. Again, it's very common of a kind of taking advantage of the fractal nature of Wyckoff reaccumulation breakouts. I'll show you on Twitter today. Okay, I put this out in real time as well. Okay, so it's this here that I was identifying and looking at, which is going to be a 2-minute chart of a Wyckoff wave pattern forming. So you can see the resistance point here. Okay, I was looking for a break above $35.65. So again, very similar to the Wyckoff, the Darvis box trading strategy, that we can identify the support and resistance levels. We can identify the fractal patterns and structures that lead up until those points. And again, because of the repeatable fractal nature of this, we can just identify it ahead of time. So I was looking at the trade there, identifying it. Okay, what we can see, you can then see the breakout that then came above the $35.65. So this is a breakout. This would be our sign of strength bar. Okay, we then go forward, and again, because of the repeatable nature of the Wyckoff methodology as well, we then know what we're expecting. So here what we can see, KL 5 min now expecting a backing up following the sign of strength. So in this period here, this is now on the 5-minute chart. Remember the fractal nature, it repeats across multiple time scales. Here's the Wyckoff wave pattern forming on the 5-minute chart. Okay, this could be, again, if we're applying the Darvis box method, this could be our box that we're looking at between just over $34.50 and $35.65. So we're looking for the breakout above, took that sign of strength, but now we've got this contextual framework. We're expecting the backing up action to happen, followed by the reversal. So at that point there, I'm saying expecting the backing up action to happen. Okay, what happens again, 5-minute structure. So we're just looking at it there. Sign of strength breakout from our Wyckoff wave pattern. We pull back down here. This is our backing up reversal. And then we have the reversal in there. So you can see, you can identify, and this is why it's so important. And if you look at the most successful traders throughout history, what did they do? They identified the fractal patterns, okay, and were then able to take advantage of them. So you can see this is, I was obviously trading Kirkland today. I obviously write it all down as well. But Kirkland, I had someone comment why Kirkland today. I just said to you because I was identifying identifying the fractal patterns. Okay, if you don't believe it, there's the trading count of all the trades logged. But if I scroll up to the top here, what can we see? Okay, so this is showing you the 2-minute charts. Remember, I was looking at it here, identifying the Wyckoff wave pattern. Okay, this obviously fast forwarded on the, or show you now the updated bit in real time. Sign of strength bar, backing up reversal, breakout bar, okay, and the acceleration to the upside. So again, if you study the likes of Darvis, you study Wyckoff, Livermore, Mark Manvini's teachings as well, my teachings, what do we all try and do? We all try and identify repeatable fractal patterns, okay, identify them, understand them, know where the optimal entries are going to be of those patterns. You then got to be able to spot them using your pattern recognition skills, identify them ahead of time so you can then pinpoint the breakout. Okay, obviously there's no point doing this backward looking. You've got to be able to do it in advance. Use your pattern recognition skills. Understand the characteristics that lead to a successful breakout from that fractal pattern. Okay, whether it's the Darvis box, whether it's Martin Navini's volatility contraction pattern, whether it's Livermore at the pivot point, whether it's myself at the pivot spring strategy, the sign of strength breakout bar strategy, or the backing up reversal breakout bar. All fractal points all have characteristics that repeat leading up until those points. So it's identifying them, understanding them, and being able to take advantage of them. So I hope you've enjoyed that video about the Darvis box trading strategy. He was obviously a very, very successful trader and what he was able to accomplish, and it does show that actually if you can ride your winners, which is one of the key points, okay, and what a lot of these successful traders do, especially those that are able to make big money, especially Darvis, turning 10k into 2 million, which is very good. He had the ability to ride his winners. It also takes, I think, using the boxes as well. Okay, if we just zoom out on this, okay, if you've got a definitive strategy for when you're looking to enter and when you're looking to get out as well, okay, it takes away that emotional detachment and the subjective nature of it, because you just know, okay, I am specifically buying on a breakout above this point. We can go a little bit deeper into looking at the interrelatedness between price and volume, supply and demand, effort versus result at those specific moments in time. Okay, but if you know your stop loss is just going to be set at the bottom of the box, then it's fine. It takes away that emotional detachment that you're just playing your strategy. Again, for a long-term investor, using the Darvis Box trading strategy could be a very successful strategy. I'd still keep in mind the context of where are you in the Wyckoff price cycle. If you want to do this, you need to be targeting stocks that are within that phase 2 markup. So hopefully you've enjoyed that video. If you're new to the channel, please do subscribe, hit the like button, comment down below if you liked it, or there's things you'd like me to cover in future videos.